BlackRock, the world's largest asset manager, recently grabbed headlines with a huge acquisition. They bought HPS Investment Partners for a cool $12 billion. So what's the big deal with this purchase? Why should it matter to our listeners?
It's a strong sign of a pretty significant change happening in finance. BlackRock's making a big bet, you see. They're betting on private credit, and they think it's about to really take off.
Take off how? What's their prediction for this private credit market?
BlackRock's projection is that private credit could hit $4.5 trillion by 2030. That's more than double what it is now. It's a massive amount of growth.
That is huge. So what's behind this projected growth in private credit? Is this just a smart investment by BlackRock, or is something bigger going on?
I think the roots of this go back to the 2008 financial crisis. After that, traditional banks faced a lot more regulation and had to pull back from lending. This created a space for other types of lenders, like HPS, to step in. And these lenders, they get their money from big investors, like pension funds and insurance companies.
Okay, so tell me a little more about this HPS. What makes them so appealing to BlackRock in this growing market?
HPS is a relatively new player, founded in 2007 by Scott Kapnick. Now, Kapnick, he's a former bigwig at Goldman Sachs' investment banking division. They manage a whopping $123 billion in private debt.
Wow, that's a lot of debt. What's their specialty?
Their focus is on providing credit to companies that traditional banks might not lend to. So this acquisition, it's essentially bringing HPS's specialized knowledge together with BlackRock's already massive $11.5 trillion under management. It's a powerful combination.
It's mind-boggling to think about the scale of those numbers. What does this strategic move tell us about BlackRock's long-term goals? What are they aiming for?
BlackRock is making it pretty clear they want to be the leader in private markets. This acquisition is just one piece of a bigger strategy.
What else are they doing? What makes you say that?
Well, for one, look at their purchase of Global Infrastructure Partners earlier this year. That was another $12.5 billion deal.
So they're on a bit of a shopping spree then.
They are. And they're putting together a collection of alternative investments that positions them as a one-stop shop for clients who want to diversify and maybe get higher returns.
So is there any evidence this strategy is working? Are other companies that specialize in private credit seeing similar success?
To get a sense of that, let's look at some publicly traded companies that are similar to HPS. For example, Blue Owl Capital's stock price has jumped by 54.6% this year, and Ares isn't far behind at 46%.
And how does that compare to BlackRock's performance?
Those gains are significantly higher than even BlackRock's own impressive 25.7% year-to-date increase.
It sounds like BlackRock could be on the right track here. Maybe they're anticipating a future where private credit becomes even more important. Does this line up with what we've been hearing from BlackRock's leadership?
It does. Larry Fink, BlackRock's CEO, has been vocal about the need to stay ahead of what clients need and to provide solutions that combine public and private investments. This acquisition fits perfectly with that vision.
So it seems like BlackRock is betting big on a future where the lines between traditional and alternative investments become less and less clear. What does this mean for individual investors who are wondering how to participate in this changing landscape?
That's an important question. As private credit becomes more accessible, it could offer new opportunities for individuals to invest in areas that were once only open to institutions. But there's a catch. Private credit is complex. It's not something you just jump into without careful thought. There are risks that need to be considered, and a deep understanding of what you're investing in is crucial.
So what are some of those risks associated with private credit that individual investors need to be aware of? What should they be watching out for?
One of the biggest ones is liquidity, or rather, the lack of it. See, unlike stocks or bonds that trade on public exchanges, private credit investments don't.
That makes sense. So what happens if an investor needs their money back quickly?
That's the problem. It can be really hard, maybe even impossible, to sell your investment quickly if you need the cash.
So not the best choice for someone who might need access to their money in a hurry. Are there other risks with private credit? Anything else to consider?
Definitely. Another big one is the potential for defaults. Private credit often means lending to companies that are considered riskier than those that can get traditional bank loans.
I suppose that makes sense. Higher risk usually comes with the potential for higher rewards, though, doesn't it?
Exactly. That's often reflected in the potentially higher returns you see with private credit, but the risk is still there.
It sounds like anyone thinking about private credit needs to do their homework and be very careful. What are some steps an individual investor can take to reduce these risks? How can they protect themselves?
Research is absolutely key. You have to understand the investments being made, the history of the lender, and the specific terms of any investment you're considering.
So it's not as simple as just picking a fund and putting money in.
Not at all. And another smart move is to get advice from a trusted financial advisor. Someone who specializes in alternative investments can be invaluable.
Makes sense. It sounds like there's potential for good returns with private credit, but navigating it all requires a cautious and well-informed approach. Do you think this trend of increased investment in private credit is sustainable? Will it continue to grow?
Well, BlackRock's move is definitely a big vote of confidence. The fact that they're putting so much money into it suggests they believe private credit will have a significant and lasting role in finance.
So for those interested in learning more, maybe even exploring private credit as an investment, where should they start? What are the first steps?
I'll say it again. Research is vital. There are good resources out there from reputable financial institutions, industry publications, and educational platforms. That's a good place to start building your knowledge base.
And then what? Is there more to it than just reading up on the subject?
Because of the complexity, talking with a qualified financial advisor who has experience in alternative investments is essential. They can help you understand the nuances.
So they can provide guidance tailored to individual needs, risk tolerance, and financial goals. BlackRock's push into private credit is definitely interesting and raises a lot of questions about the future of finance. What other trends in the financial world are you keeping an eye on? What else has your attention?
One that's really capturing my interest is the growth of sustainable investing. We're seeing more and more investors wanting their money to reflect their values, looking for investments that focus on environmental, social, and governance factors.
So people want to invest in things that align with their beliefs and make a positive impact.
Precisely. And this trend is starting to reshape the investment landscape, pushing companies to prioritize sustainability in a way they haven't before.
It does seem like the financial world is going through some big changes. It will be interesting to see how these trends play out and what opportunities or challenges they bring for both institutional and individual investors. Any final thoughts for our audience before we wrap up?
BlackRock buying HPS is just one example of how dynamic and ever-changing the financial markets are. Staying informed, diversifying your portfolio, and seeking out expert advice are more important now than ever before to navigate these shifts.
That's great advice. Private credit and sustainable investing coming together is really fascinating. How do you see these two trends impacting each other going forward?
There's a definite increase in using private credit to fund projects that have a positive social or environmental impact. We're seeing it in things like renewable energy, building affordable housing, even social impact bonds.
So investors could potentially earn a return while also supporting solutions to important issues. What would you advise individuals who are interested in aligning their investments with their values like this? Where should they start?
Well, first, you need to be clear about your values. What areas are you most passionate about? Once you know that, you can research funds or investment options that specifically target those areas.
So it's not just about finding any sustainable investment, it's about finding the right fit for your values.
Exactly. And there are more and more options out there all the time, everything from mutual funds and ETFs to private equity funds that focus on sustainability.
I imagine due diligence is still crucial, even when the goal is to make a positive impact. What else should individuals consider when venturing into this space?
It's important to remember that impact investing is still investing. You want to do good, but you also want to make sure your investment is financially sound. Look at the track record and the management team of any fund or investment opportunity to make sure it aligns with your goals and risk tolerance.
A balanced approach is key, considering both the impact and the financial aspects. Any final thoughts for our audience as we wrap up this look at the changing world of finance?
The world of finance is in constant motion, creating both challenges and opportunities. By staying informed, diversifying their portfolios, seeking out expert guidance, and aligning their investments with their personal values, individuals can position themselves to succeed in this dynamic environment.
It's been great exploring these complex and interesting trends with you. Thanks for joining us.
It was my pleasure.
Bye-bye, and see you in the next video.